Hello, everyone. So, very good afternoon and warm welcome to our discussion on Pradhan Mantri Viksit Bharat Rozgar Yojana. If any of you were getting surprised by looking at the title of the webinar discussion, it was published as something else, but it has now been changed to something else. But in the last minute, I think this is some feedback also. We realized that it's better to call it with the right name uh, rather than which typically we use as an ELI in call with the right name, which is Pradhan Mantri Viksit Bharat Rozgar Yojana, so that it it makes us understand the real intent and the seriousness of the scheme because sometimes name says it all. And that's a feedback we received from some regulators also, and I think it's a very valid feedback. So I thought so we change it. So don't get confused if it's the same webinar you have joined. You're right at the right place. Is that now we have to intentionally keep looking at the right name and maybe talk about the right branding of it because that changes a lot of perspective also, and we will discuss that as we go along during the discussion. Again, reiterating this slide, I'm sure you have heard it. This slide from me many times, 28 times before, uh, in different with some different numbers, different slide presentation, but we are still the same company doing regulatory technology services and products. Uh, the flagship product which we offer is for GCMS Global Compliance Management Solution, which you could see on the bottom. And I'm sure many of you are already using the software. This is the software helps you know, manage, track, not report to the board rather. Your regulatory compliance status is not just in India, but across 70 plus countries. Today, 550 plus entities globally are using our technology, our services to keep themselves risks free from the regulatory changes and regulatory obligations and compliance standpoint. And more than 15,000 users. And we are now a team of 105, exactly 105 legal and tech professionals, primarily based out of Jaipur, Gurgaon, Bombay, and Pune. And if you have not been using a product, feel free to reach out to us, which we will discuss in the end. But let's start with the discussion. And I'm sure those of you who have already been are are attending our webinars know Anurag very well by now. But let me still do a customary introduction of Anurag. He is the founder and partner, co-founder and partner in the By the Books Consulting LLP. Anurag is a CA by profession with 20 plus years experience working with large Big Four consulting firms. His experience spans across tax, social security, immigration, HR, and I would say, as much as I understand from Anurag and I have known from him, uh, HR, social security, payroll, taxation, that's his favorite subject. And I see a lot of passion when he talks about these subjects and the kind of depth he speaks in those subjects. And I'm sure if you have attended those webinars, you have always seen those kind of a depth understanding coming from Anurag. Anurag, warm welcome. And I think, I see from here onwards, I'll also be one of the attendees for you, because this is as much as you have tried to explain this to me, I have still not understood much of it. So I'm going to ask you
Mm,
some very basic questions. You have to be okay with this, and
mm,
also why basic question? Because today when I looked at the list of registrations, I saw there are people who are in the obviously from the corporate compliance side, HR, tax teams are there. I also saw there are some people who are actually in the employees who have nothing to do with
mm,
compliance. Uh,
mm,
and I also have noticed that there are some regulators also who have also registered for it. So I think there is going to be a very interesting audience. So you would want to go depth at the same time you would want to go, you may have to go to basics, talk a layman's language with someone
yeah.
not with a compliance background should also be able to understand and put both employee and employee's perspective together here. Uh, Over to you with this agenda, and I think mostly everybody knows about the agenda. But over to you. Happy to uh, walk you through with the discussion today.
Thanks, Jayant. Thanks for a very wonderful introduction, as always. And hi to everyone from wherever you guys are joining. A very warm welcome and thanks for joining our today's webinar. Um, as Jayant laid down the context in a very lucid manner, that we are going to be talking about Pradhan Mantri Viksit Bharat Rozgar Yojana. It was earlier denominated as a employment-linked incentive scheme, but I think in the month of July itself, this was formally launched via a press release, and then all the modalities have started coming out. There's a dedicated website, web link via which the Government of India has formulated, via which uh, one can go and see what are the guidelines around that scheme, what is the FAQs that they have formulated. At the same time, there's a lot of push from the government side. They want this scheme to be successful. They are encouraging both the organizations as well as consultants like us to go and promote this scheme, because there's a thought process that this can do really good for India and for our vision to become a Viksit Bharat by 2047. Now, in today's session, we're going to be covering, of course, what is the government vision behind this scheme, as well as what this scheme is all about. We will also be covering the key definition, because the definition is what will provide a lot of clarity as to how the employee as well as establishment will be able to avail the benefits out of this scheme. And then we will move on towards the key features of this particular scheme. What are the eligibility criteria? What will be the incentive structure? And what are the benefits to the organizations? And some of the few key aspects that have to be kept in mind as well. And last but not the least, of course, how we are or how we can help the organization as well as the employees in availing these benefits. See, I'll tell you, the this scheme was, I would say, conceptualized somewhere in 24-25 in the budget. We heard at that point of time that the government's intention is a sustainable employment, is a vision for India. Considering our demographics in terms of the population wise, we have a very young demographics. There's a urgent need or a requirement for employment, at the same time skilling of the people as well. And so with that vision, at that point of time, a scheme was proposed. Of course, those groundwork had to be done from the Ministry of the Labor and Employment side, as well as the EPFO side as well. So once all those groundwork was done by them, then in the month of July, they came out with the press release that cabinet has approved the scheme, and what will be the basic tenets or the structure of the scheme. And pursuant to that, all those guidelines have been published. Now, to be very, very clear, the government's vision on this PMVBRY scheme is very clear. It is nation building, of course, but nation building through employment. See, one thing that we have kept on arguing, and we have seen in media as well, that as long as you keep on doling out freebies, those never work in a productive way. So the best thing for an economy to grow is through employment. The greater the number of employment, the greater the number of the skilled professionals, skilled personnel, the greater will be the growth for the India as a nation. And so that is the number one vision when this scheme was rolled out. The second is, of course, the formal employment. We know there's a greater amount of informal employment which exists within India, as the result of which there are many employees who are not covered by the basic social security coverages, like provident fund, ESI, gratuity, and these are all very structured schemes that have been formulated uh, by the government to basically benefit and for the welfare of the employees. So the purpose is again to bring the informal employees to this particular segment. So that is a second objective. The third is, of course, supporting the first-time employees. So you might be having yeah, individuals who are the first timers, who are first time joining a formal employment stream. So in order to provide a support to them, as well as a kind of a taken as an offset, because whenever an organizations want to engage a first timers, there's something at the back of their mind that they will be spending that much amount on skilling of these professionals. A lot of time will be spent, and they may or may not stick with the organization after some point of time. So, in order to provide a little bit of a catalyst around that, so the government has worked out that the scheme will provide benefits to the first timer employees. Uh, of course, the benefits will be provided to establishment, which will in turn reduce the overall cost of hiring for the employment, which brings us to the fourth vision. And the last but not the lead is, of course, driving the inclusive economic growth. So the vision is to have a Atmanirbhar Bharat, and that is possible only when we have skilled employees within that entire structure. So that is the government vision when they rolled out this particular scheme. This is PMVBRY, which is Pradhan Mantri Viksit Bharat Rozgar Yojana scheme. It is run under the supervision of Ministry of Labor and Employment, and the administrating authority will be the Employees Provident Fund organization for this particular scheme. It will be effective from August 1st, 2025. So from the month of August 2025, the scheme is now it has got implemented. The relevant PF portals are now active and live, wherein establishments can go and basically punch in those details, which will help them in getting those direct benefit transfer. Now, the basic construct of the scheme have been basically uh, divided into two parts. The first is the part A, which will benefit the first time employees. The second is for the part B, which is towards the employer organization. And the amount of benefits for the part A will be as high as INR 15,000. Of course, it will be bifurcated into two installments. The first and the second installment, we'll talk about it in much more detail. And the second would be around the employer incentive, which would be maximum amount of INR 3,000 rupees per employee per month, which will be provided for a period of 2 years in case of every other sector other than a manufacturing. For manufacturing, in fact, the incentives will be provided for a total period of 4 years. And the effective date of the effective enrollment period for this is starting from 1st August 2025, and it will go on for a period of 2 years and end on 31st July 2027. Uh, Jayant, if you ask me, interestingly, this is not the first time that the government is using a platform like EPFO to dole out such kind of a scheme. If you recall, during COVID times as well, we saw there was a Atmanirbhar Rozgar Yojana, which was doled out for employees again who are joining for the first time, or rather also for the employees who got unemployed because of the pandemic scenario. So that was one scheme that was rolled out. And I remember there, even under the tax framework as well, there is a section called Section 80 JJAA, which provides a 30% deduction for generating new employment. Of course, at that point of time, the limit was, I think, for employees who are falling below the threshold limit of INR 25,000. ABRY was again for a segment of employees which was for 15,000, who used to have a gross wages, or rather wages of 15,000. In this particular scheme, now they have pushed the limit to such an extent that most of the employees, or rather first timers, would be getting covered in this particular Part A benefits.
In fact, Anurag, when you were talking in the previous slide, that I want to also add there that yes, I think the genesis of the scheme is not 2024, 25, 24. I think it's the genesis was somewhere in COVID, because that's when the government realized that if they have to even get a data of people who need any social benefit in any situation. Now, this situation, it was COVID, it can be anything else, down the line. If they have a right data available, they can, devise also right schemes. Secondly, I
Hmm.
think I also see that I think when we were kids, we everybody looked at government job as the only best option
Hmm.
available. And why? Because it comes with a pension. But today, the number of people employed in government jobs and vis-a-vis in the private jobs the proportion has changed. Now, more and more people
Yeah.
are going for private jobs. Now, here, uh, somewhere, the formal employment and the informal sector has really you know, got messed up here, and somewhere government needs to bring, because today we are not seeing a challenge of aging population, but 20
Mhm.
years from now, 30 years now from now, I think we would start seeing the problem of aging population who are working in private sector but do not have a social benefit available with them. You may have a house which worth is very high, but that will not get you money for your daily needs. So the government somewhere need to put people back into some kind of a social security net, which I think that's
Yeah.
where I feel the government is trying to put uh, emphasis in the early days of for both employer and employee, that okay, start thinking in the right direction and build it as the right corpus for yourself.
No, I just want to add to your point because you're very hit the nail on the head by saying that yes, social security is the need of the hour, and we know that right now India has got a demographic advantage in terms of having younger population, but this will not exist for long period of time like in any other nation. Right now we might be at a peak scenario, but things will happen when we would be having a greater number of people who have crossing the 50 plus limit or the 60 plus age bracket, and they would be requiring social security. See, the very concept of the social security is that the younger population contribute and the benefits are then doled out to the aging population. But you need
Right.
to have that level of demography. What we are seeing happening in Japan, or for that matter in European countries, is that the aging population is on a higher side as compared to the young population. Right now, China, India have that demographic advantage, but for not long. So that is how,
Right.
if things have to start, things should have started a while back. They have started, but at the same time, uh, true advantage will come into picture only when you have informal sector employees also joining this formal stream and coming under the social security umbrella. That is
Right.
the way the government would be having good amount of corpus to cater to the needs of the future aging population.
The one what you're saying, it gives me, it raises two questions. I don't know whether I should ask it on this slide or the next slide. But under this scheme, does it cover the gig workers, or
See, yeah, so if we look at, and of course we would be mentioning it in our definition slide as well. See, the construct or the basic aspects of the contract worker and the gig workers is very, very different. For them, there is a separate set of schemes which have been rolled out. Gig workers is somebody who is rendering or providing services, but not under a traditional employer-employee, framework. So what happens is, even today, as of now, if a company is engaging, platform workers, consultants, or gig workers, typically these segment of people don't usually come under the EPF umbrella. For them, either they contribute themselves on a public provident fund scheme. NPS is there for them, and now what we are seeing is happening in different states that they've started rolling out social security benefits for the segment of population as well, wherein the aggregator will also be a required to contribute toward the social security benefits for such no category of workers. But to answer your question, this particular scheme is not applicable to contract worker, gig workers, or platform workers.
yeah? One other follow-up question here. You said the effective date and end date of the scheme. Now, what if I'm hiring somebody in the month of June 2027? So that person will be eligible for benefit only for 1 month. I'm basically trying to understand what does effective dates mean. For me to enter the scheme, and whenever I enter, then from there onward, 2 years I'll get benefit out of it, or this benefit period is only 2 years.
See, for the Part A, because the Part A will be paid in lump sum installments, so there will be two installments, and of course we will be covering it in detail. But just to answer your question, this period is for being eligible for getting covered in the scheme. So let's suppose if there is a first timer who is joining in 1st August 2027, that person will not be covered under the Part A benefits. However, having said that, because the Part B benefit is going to be running for a period of more than 2 years, so For the purpose of counting for counting the benefits for the organization per se, those first timers will also be counted. But Part A benefits will be covered in that particular specific period only.
Understood. Thank you.
So I'll quickly run through some of the key definitions, and these definitions have been, explained in the guidelines, which has been, which is there in the public domain as well, and which provides a, good bit of clarity as to what this scheme is all about, what will be the eligibility criteria, and the other nuances around the scheme. So establishment, they have defined existing establishment as any establishment which is registered before 1st August 2025 will be an existing establishment. New establishment is any establishment who is registered on or after 1st August 2025. We have also have exempted establishment, and these are those establishments who are basically having a private provident fund trust. So this will be, you know, having their own PF trust, making a contribution, making the investment as per the investment pattern laid down by the EPFO. But at the same time, normally these exempted trusts are exempted from the PF provision, not from the pension provision. So that the pension part is something that is still contributed towards the EPS, which is Employees Pension Scheme, by filing of the relevant, by depositing the relevant amounts with the EPFO through ECR. Financial literacy course. Now, that is an interesting concept, and I'll be speaking about in greater detail in the upcoming slides. But financial literacy course is a course which will be mandated by EPFO and which is required to be completed by the employee. And this will cover, concepts like personal finance, savings, investment, and a financial planning. What we are anticipating is that there will be a kind of a learning and development module which will also be, uploaded in the EPFO portal, and employees will be required to complete that module, get a completion certificate, and then they would be entitled to incentives. Completed wage month is the first month for which an employee's EPF contribution is fully recorded in the electronic challan cum return form. Any employee who is joining on or before 5th, the same month will be considered for first completed wage month, and anybody who is joining after 5th, the subsequent calendar month will be considered. So this completed wage month is a concept which will be applicable for both the employee and employer at the time of the calculation of the incentives. And I'm seeing a lot of questions which are coming up, and I'll be happy to answer them. So I'll just quickly run through, few concepts around it, and then we'll start taking up the questions as well. Yes, employee types. Now, this is where when we, Jayant, when we went through the construct of the scheme, we were debating a lot on who will be considered as a new employee, who will be considered as a first timer. So that's why I think the government also knew that this would be a kind of a gray area, and that's why they have defined these relevant concepts. So any person who is joining during the scheme registration period, any person will be treated as a new employee. Now, we have to keep it in mind that for Part A benefits, the basic terminology that one needs to keep in mind is first timer. For Part B, it will be new employee. First timer is anybody who is contributing towards the PF for the first time. Uh, and that is where some confusion would come, that there would be a category of individuals who have had their UN created at one point of time, but never contributed towards the PF. That is one. Second is people who never had a UN. They are joining the employment stream for the first time, getting a UN generated. So this will be the second category. But for all practical purposes, I think the government has clarified that first timer will include both the category of employees. So even if you have had earlier UN but never for a single time contributed towards PF and now going to be contributing, you will be treated as a first timer. Rejoinee is somebody, lateral placements coming from different organizations, they will be treated as a rejoinee and will be pertinent when we go in for the category B benefits. Eligible employee means any new employee who has had at least 6 months of contribution and gross wages. Now, the concept of the gross wages, I'll explain. The Anybody who is having a gross wages less than INR 1 lakh per month will be treated as eligible employees for Part B incentives. Old employees is any employee who are existing ones who joined before 1st August 2025, and they will not be eligible for any incentives. Baseline is something that they have defined, and this baseline will be important when we go in for the Part B or Category B, Part B benefits for the organization, because they have laid down certain criteria. And for that purpose, a baseline has to be determined. So, for existing establishments who are registered before 31st July, the average number of employees will be counted based on the ECRs which are filed for the past 12-month period. And this is something, to average out the employees. What will be the baseline? I'll explain it in the upcoming slides. For establishments registered before 1st August to 31st July, the average number of employees will be considered based on that number of months, which will be from the date of the registration till 31st July 2025. Whatever is the average, they will be considered for baseline. And for new establishments, which is registered from 1st August to 31st July, the baseline will be absolutely 20 employees. So for anybody or any organization which are getting registered, the baseline will be 20 employees. As far as regarding registration is concerned, I want to make it very, very clear that right now there are two modes via which an organization can get themselves registered when they're getting incorporated through MCA portal. And the second registration alternative could be through Shram Suvidha portal as well. So these are the two forms via which an organization can get themselves registered with the EPFO. So what is the eligibility criteria for employers and employees? If we first focus on the employee aspect, any person who is joining an establishment from 1st August and 31st July will be considered as a first timer. He or she should not be an EPFO member, but even if they have a UN, they will be considered for this particular benefit, even if they are going to be contributing for the first time. And the EPF contribution is received for the first time from August 2020, as I was telling you earlier. So the monthly gross up salary is your total emoluments, gross up salary. And when we file ECR, so there is one column for gross wages and one is for your PF wages. So gross wages is whatever is your total salary, whatever is your total monthly salary. So that is termed as a gross wages. This time, what the government has done is they have specified a limit. So anybody who is earning up to INR 1 lakh will be considered for these Part A benefits, as well as Part B as well. So 1 lakhs per month, which is around 12 lakhs. Anybody having a 12 lakh CTC will be eligible to get benefits, provided they are first timers and fulfilling the other conditions as well. Uh, the second important point, and this is again very, very important, that all these employees who are joining, even the rejoiners as well, for the benefits of both the employee as well as employer organization, they need to get their UN authenticated through FAT. And what FAT means facial authentication technology. And this is interesting because Jayant, I was speaking to some of the regulators in EPFO. We also attended a couple of sessions, and they said this particular scheme is a culmination of the all the past experience that the government has had with different schemes. And that's why now they know that how companies might try to do a uh, basically indulge themselves in malified practices, showcasing false employees, or all those things. So this time they are relying very much on the technology, and you would see that the government is not going to be asking any information from the employer employer. Rather, the EPFO portal and the monthly returns which is being filed will be used by them to basically cull out the data, do all those data mining, and then do their number crunching to arrive and dole out those benefits. And that's why this facial authentication technology, and this is basically done through an app which has been developed by Government of India, which is called Umang app. So once you go into the Umang app, you need to get yourself registered. Everything will be driven through the Aadhaar link process, and then there will be authentication. Your face will be authenticated, and once that is done, the UN will be generated. So only those UN which are generated using this particular technology will be considered for these incentives.
So
The other
Anurag,
in,
what you so sorry,
Hmm.
I'm what you're saying is neither the employee nor the employer needs to do any kind of a additional registration to get eligible for this. It'll be all automated process.
It will be all automated process. There will not be any, kind of a bureaucracy involved wherein you have to file out any separate forms. The only thing that an organization has to make sure is, because they have activated a link in the EPFO portal for the employer organization, wherein they need to just log in, and they will see that there is a, this particular scheme tab is there. Enter into that, fill in the details like your PAN number of the organization, the GSTN number of the organization, as well as the uh, PAN linked bank account details of the organization. So these are the only three details that an organization has to provide, and they will be basically entitled to the benefits under the scheme. For the employees, apart from creating their UN, which anyways they have to do when they're joining an organization, there's not any requirement for them to do anything at all.
Because facial authentication on Omeng app anyway has become mandatory right now, even for the existing employees. That exercise almost every organization has already done right now. Um,
Absolutely, absolutely,
right.
absolutely, and
So
that's why.
there's nothing there's
And in fact, I remember there was a circular which was rolled out by EPFO. I think it has been that particular date has been postponed, of course, because of the, the volume issue and all those. But the EPFO themselves are now stressing that going forward, the UN will be generated through using this particular app through this particular technology.
I want to insist that I was want to understand employee must stay in organization for 6 months. Now, what
Hmm,
happened if the employee leaves in 5 months, 2 months?
hmm,
Obviously, he would have the employer would have got some incentive because he joined in a particular month. Uh,
hmm,
on that month he would have achieved some targets. They said above five, but employee leaves in between. So what happens is the
hmm.
pro rata based calculations will be done, or what will happen in that sense?
No, the government is very clear. You have to stay put for a period of 6 months,
Hmm,
unless until you complete your 6 months. So
hmm,
how does the government get to know that you are
hmm.
there with the 6 months? Because those ECR filings are done on a monthly basis. Okay,
Right.
every organization has to file those ECRs, and through those years, the government will be keeping a tab. So if there is Mr. X who has joined the organization for the first time in the month of August, so for the August, his contribution will come into picture. For November, September, October, November, December, January, till January, the government will have a total visibility. Okay, so and so person is coming. So the data is there with them, and that's why what they're stressing on and is the longevity of the personnel as well. So think of a scenario wherein anybody who is a first timer can say, okay, fine, it's a good amount of benefit. 15,000 is not a very small amount. They would say, okay, fine, let me join the organization, let me get the benefit, let me work there for 2, 3 months, and then leave the organization, or maybe do some kind of a moonlighting thing as well, which is quite prevalent nowadays. So the government is aware that such kind of things might happen. And that's why the purpose is, first of all, the benefits will not be released at the as soon as the person joins the organization. There's a waiting period. There's a lock-in period. There's a waiting period. After 6 months, the first installment will be released. The second installment will be released once a person completes their financial literacy course. So it's not, it's a money available or an incentive available, but with certain riders as well. So unless until a person completes their 6 months of employment, they will not be entitled to these benefits. Let's look at subsequent slide. Okay, this is around the employer. So as I was telling, the employers organization must obtain an employee EPFO code and file monthly employment return in case there are establishments. So just to lay down the background, any establishments who is hiring 20 or more employees are mandatorily required to contribute towards the PF for the eligible employees. Anybody who is lesser than that, they can still get themselves voluntarily registered. So this and at the time of incorporation of the company as well, those numbers are now getting generated by when the spice and all those forms are being filed at the MCA portal. So any establishment who already has a PF code already doing that is anyways an eligible establishment. Uh, and the baseline limit that the government has specified is, and those baseline will be calculated through the past ECRs. So for any establishment whose baseline is less than 50, they have to hire an incremental employees, at least 2 employees every month. For establishments whose baseline is equal to or more than 50, it has to be 5 employees per month that they need to employ. And again, the benefits will be paid only if the new employees, which is first timer plus rejoinees, works for at least 6 months with the organization. So again, they have basically tagged the employment with the service tenure as well, and the benefit with the service tenure.
Anurag, some bit of clarity. Now, does it mean net five employees? Okay. Uh, or total when sorry, let me say there are in a company which has to have at least few employees, the base is 50. There are three resignations, so there are people they filled and two additional hiring they did, so total number of new hires is five. Now are
Hmm.
they eligible?
Yeah, but again, the calculation methodology or the EPFO will be calculating is in a
Mhm.
very different way because uh, again whilst we were having a discussion with the regulators a few days back, they told there's a lot of debate which is going internally as to what will be the correct calculation mechanism. And so if you see in the guidelines as well as the FAQs right now, no numerical simulation has yet been released by the government as to how the calculation will be done. They have laid down some basic tenets around it, but there is certain gray area as to how the government will be calculating. What we believe is that, of course, the ECR will be the foundation for those calculations, but those 6 months CCR will be averaged out. Based on that 6 months CCR, your baseline plus your incremental will be worked out, and then every month, data will be used to see whether any additional incremental employment is being generated based on these threshold limits or not. If the answer is yes, then for those months, the employees will be entitled, or rather, organization will be entitled to those benefits. If it doesn't fulfill the criteria, then for that particular month, the benefits will not be given to the organization, and those benefits also not going to be extended further as well. I'll come to on that statement because all those calculation methodologies will be covered in the subsequent slides as well.
And one quick question is this benefit applies to every industry irrespective what they're doing?
Yes, in fact, for manufacturing industry, the incentives will be for a period of 4 years,
4 years.
rather than, yeah, for every, so any, so the key criteria is any company, it is normally 2 years. For manufacturing company, it's going to be 4 years. And now the answer, or the rather the question will come up, how will the EPFO determine whether a company is a manufacturing company or a service company? At the time of the enrollment, at the time of furnishing the Form 5A, all those details will be captured. And all those data is already available with EPFO, whether this establishment is as a service industry or a banking or a manufacturing. And so all those is something that is already available with them, and they have already tagged those establishments likewise.
Okay. So there was one question whether NBFCs are eligible. Your answer is yes,
Absolutely,
every
absolutely.
as from it.
Every
And
establishment who is covered with EPFO is eligible.
what I also understand, when looking at these numbers, any large organization, by default, they would get the benefit because they would anyway be hiring five new employees every month. So by default, they would anyway get covered. It's more of, I would say, it's a small size organization, which is 50, 100 people,
Hmm.
200 people who may not be hiring five new employees. They will have to
Hmm.
look at whether a particular month they are going to get benefited or not. But otherwise, this is a very good scheme for anybody who's sizable in number.
Yeah, I'll tell you, the government was cognizant of the fact that not every month I would be able to generate employment. There
Hmm.
might be some months here or there as well. But that's
Hmm.
also the limit that they've kept is quite nominal, I would say. Because any organization having 50 or more than 50 employees, 5 employees is a very, basic threshold. And any employee
Hmm.
organization having less than 52 employees, additional increment. At the same time, the government saying is to determine your eligibility criteria, to determine whether you're eligible to get the benefit or not, we will rely on your 6 monthly ECR. We will average it out because the ECR captures your headcount, as well. So we'll go through those average numbers to determine first and foremost whether you are eligible or not, whether you are crossing that threshold limit, the baseline limit plus the incremental threshold. So once that is determined, then every month when you're generating those additional, employment, you will be entitled to those benefits. So I know there are a lot of questions coming. We have to be cognizant of the time as well. So I'll just quickly, cover the incentive part as well. So as I was telling you earlier, the Part A benefits will be provided after completion of 6 months of continuous service. So uh, just to clarify, the benefits under the Part A, which is for the first timers is up to a maximum extent of 15,000 rupees, which will be paid in two installments. The first installment will be paid once an employee completes 6 months of service. Once a first timer completes 6 months of service with an organization, there will be a direct benefit transfer from the government to their Aadhaar linked bank account. No intervention by the employer, no paperwork, nothing. That is what they have laid out in the scheme. The only thing is, or rather, I would say the only compliance requirement is that the employer has to file 6 months, or rather, they have to be filing the ECRs on a timely basis. So that is the obligation of the organization to ensure that their employees get their incentives is to file ECRs on time. At the same time, the ECR's disclosures have to be done on a correct basis. So whenever organizations are filing or getting their payroll, rather ECR uploaded, they have to make sure that the gross wages, EPF wages, and all those contributions are being correctly reported. That is the only ask from the organization side. Rest will be done from the EPFO. Now, the amount of the incentive will be equal to 50% of the average EPF wage. And that is where things get interesting, Jen, because uh, it should not happen that in the first month organization, just for the sake of, providing the or making them cover, they say in the first month, okay, I'm going to be paying you this much, and then the second month or the third month you fluctuate. There are some organization who may like to plan it, but what EPFO has mentioned it that the amount of the incentive will be linked to your average EPF wages for 6 continuous completed months, which will be captured from your ECR. So based on that, whatever is your average EPF wages for 6 months, 50% of that, subject to a maximum of INR 7,500, will be remitted directly. The
What
second
do you mean by
installment,
what do you mean by EPF wage?
for EPF wage, what I mean is, uh, as I was telling earlier, that when we file ECR, there are two columns that is required to be reported. One is my gross salary, and one
Hmm.
is my PF wage. As you might recall, under the definition of the EPF Act, there's a definition called wage, which comes in section 2 of the EPF Act. So they have defined wages as, basic salary plus DNS allowance, plus any, food allowance or any that sort of, or any other similar allowance being provided. So that is termed as wages for the purpose of arriving at the contribution. So typically, just to give you a very rudimentary example, let's suppose my CTC is 100. That CTC is broken into basic salary, that CTC is broken into HRA, or other allowance. So for the purpose of the PF contribution, basic salary will be factored. So if my basic is 50% of CTC, which is 50 rupees, my PF wages would be 50 rupees, on which the contribution of 12% will be made by the employer, as well as a matching contribution by the employee. Okay.
Understood.
So on the second installment part, will come into picture again with some riders that you complete 12 months of service, you complete the financial literacy program, your ECR has been filed for these 12 months on a timely basis. Then the second installment will be released, but there's a big but, that the second installment will first go into some kind of a saving instrument. There will be a lock-in period around it. What will be the modalities around it? That is something that the government will come at a later stage. But that second installment will not be released immediately. Rather, it will be tied up with some saving instrument, which will earn some returns. And at a designated point of time, once that lock-in period is at, that money will be then credited into the respective Aadhaar linked bank account of the employee. So this is how
Okay.
the second installment will be released.
But
Subsequent slide for the,
you're
yeah.
specifying it is bank account, not the PF account.
No, yeah, it will be. So this particular mechanism will be called as, direct benefit transfer, which is your Aadhaar-based payment system, ABPS is
Hmm.
what is called. So the government is
Hmm.
using this one extensively to provide a direct benefit transfer for the other benefits as well. So the similar technology will be used to ensure that the rightful individual is getting their due benefits from the government directly, without any intervention, without any middleman getting involved. And this is where the things are different, Jen, because uh, the ABRY scheme, which was launched at the time of pandemic, that was a different scheme in the sense because the government was contributing towards the PF. So the money was flowing into the PF basket without any contribution by the employer or employee. But herein, what will happen is the PF contribution will continue in a normal way as they normally do. But based on the contribution made by the employer as well as employee, the government will work out the incentives and directly remit it into the respective bank account of the employee. Now, part B is, as I was telling earlier, was focusing on the incentive for the organization. And it can be as low as 1,000 rupees, as high as 3,000 rupees per employee per month. And what they have done is they have basically will be providing benefits based on a slab structure. So anybody who is having a EPF wage slab of less than 10,000 will be the organization will be entitled to a benefit of 1,000. Of course, whenever a person is having a wages of even less than 10,000 as well, then the incentives will be provided at a rate of 10% by the government of India. Wherever the employee is having a EPF wage in the range of 10,000 1 till 20,000, then the benefits will be 2,000 rupees per employee per month. And wherever it is in the wide range of 20,000 to 1 lakh, then the EPF benefits will be 3,000 rupees. So this payment will be released in lump sum every 6 months. It is not going to be that every month I hire additional employee. Uh, every employee is hired every month and then quickly you receive those benefits. No, it doesn't work that ways in this particular scheme. So what they will do is they will first map the ECR for the past 6 months, which is from April till January. The ECRs will be mapped. Based on that, they will work out whether you are first and foremost eligible or not. And then they will work out the eligible incentives for those particular organizations. And as I was telling you earlier, Jen, that these incentives will accrue only for months where the threshold employment is maintained. So let's suppose I'm an organization having a baseline, employee of 60. So every month I'm required to generate a 5 employees every month. So let's suppose in a particular month I'm not able to generate that employment. So for that particular month, the criteria is not getting fulfilled, and I will not be entitled as an organization to those benefits. So there will be no incentives given for that particular month. But if in a subsequent month I'm able to fulfill that criteria, then for that subsequent month I will be able to get those benefits.
Does this principle of 6 month continuous employment also apply on the employer
Can you
incentive?
come back on this question? Yeah.
So the principle of 6 month continuous employment,
Hmm.
does it also apply to the employer incentives? So
Yes,
will
absolutely. 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 This six
so
months
if
is there.
okay, so one question is if I hire 5 people in September, okay,
Hmm.
and three of them continued for more than 6 months, two of them left in between.
Hmm.
So am I eligible for incentive for that month or not?
No, you will not be eligible for those particular set of employees. So let's suppose I'll give you more
Okay.
simple example. So let's suppose
Hmm,
in a particular month I engaged 6 employees, which is my
hmm,
net incremental, employment that I'm generating. So for those 6 employees, I'm getting eligible. Fine. So for those 6 employees, ideally I should be able to get that incentives after completion of 6 month period. Now in the midst, 3 employees left the organization. They didn't completed their 6 months of requisite tenure. Then for those 3 employees, the organization will not get those benefits, even if they are eligible. the organization is even though eligible based on that average criteria. Okay, so any employee who has left the organization before that 6 month period will not be able to get those incentives for those employees.
So the responsibility of ensuring that employee also continues for 6 months lies also on the organization. So it's not only for the employee to continue for 6 months. It is both way, right? So
Absolutely, absolutely. So
understood.
in a way, it is very interesting because employee first timer, the incentive is to stick with the organization for a period of at least 12 months. Because
Hmm.
even if for the part A benefits, even if I complete 6 months, I will be eligible for first installment. Now, if I want to get second installment, I have to stick with the organization for 12 months. The second thing is for the employer organization as well, it's a 6 month criteria. Those person has to stay with the organization for a minimum period of 6 months, and then the organization will be entitled to get benefits for those employees for a period of 24 months. For each employment generated, the organization will be getting an incentive for 24 months. If it is a
Anurag,
service organization, or if it is a manufacturing, then they will get a benefit of for each employment generated. The manufacturing organization is going to get a benefit of 48 months.
one other question coming in my mind right now. Uh,
Hmm.
Now, how does this? Where does it how what will in which head this incentive gets counted? Will it be the organization income and will be our company will have to pay taxes on this? Will be counted in the other income? Where? Because it's not going to PF, it's getting coming to my bank account directly.
Yeah, that's a very, very interesting question. I mean, not many people would have thought about it, but of course, once an employee as well as the employer or organization gets those benefits, they would say, okay, fine, good, we are getting a good monetary advantage. But then there's a tax side to it as well, because wherever we are getting incentives and it is being directly credited into my bank account. So as an employee, I would say, okay, fine, 15,000, even though you might say, okay, it's a nominal amount, how long the tax can be, but there's a tax implication to it as well. From the employee side, I wouldn't say that it would matter that much because anyways, they are covering a segment of employees who might not be having the tax liability because from this
Tax
year
liability.
onwards as well, 25, 26, 12 lakhs is a exempt income
Hmm.
if you are coming under the new tax regime.
Hmm.
So I wouldn't be that much, bothered for the employee segment. But for the employer organization, they have to keep in mind that wherever they are getting those benefits, that should per se be treated as a taxable income in the organization hand, unless and until. Uh, and then I'd like to put in a disclaimer here because we never know that based on the feedback provided by the companies, the government may roll out some kind of exemption notification wherein these incentives will be treated as a non-taxable income. As of now, the position is that such incentives will be treated as a taxable income in the hands of the employer organization.
So Ministry of Labor and Employment will give you incentive and and
That is how it looks out, but uh, we'll have to see how it works out because obviously the organizations will be giving their feedback,
okay, but
and the government is also going to be taking that into account because you can't give from one hand and then take
one
it
hand
from
and
another
take
hand.
other one,
Uh,
right?
uh, So
That's fine.
I mean, some kind of clarity would be coming because if you look at the even the FAQs as well that the government has released, they
Hmm.
have not mentioned any exemption around it, but I would just quote because that FAQ is in front of me. It says that the incentives received under the scheme shall be subject to the provisions of the Income Tax Act 1961, unless, and that's a big unless, any specific order is issued for exemption by the competent authority. Who will be the
Okay.
competent authority? Ministry of Finance. So
Ministry
Ministry
of
of Finance has
Finance.
to come out with a notification around this thing. Yeah. So as I was stating earlier, Jain, so this slide is particularly important because this is where the complexity around how the government will be doing the calculation will come around, and that is where we had a connect with the regulators because I was very keen on sharing some kind of a numerical simulation with our today's audience so that at least from the organization side one can appreciate and understand what is the kind of benefits that will be they will be entitled to based on the based on the incremental employment generated by them. I would have loved to basically showcase that thing, but after due consultation with the regulators, they told that there's a lot of debate and a lot of constructive discussions which are happening. And so they told it would not be a right moment to now release any numerical simulation unless until things are finalized from their end. There's a technology side as well as to it, because how the backend calculation and all those dynamics will work out is something that those modalities are being worked out by EPFO. But as of now, the guidelines say that for working out the eligibility criteria. So as I was telling you earlier, for organizations, the incentives will be provided after 6 months. So once those 6 months get completed, how the government will be working out the eligibility criteria is they will look at the average workforce as per the ECRs. And if that average workforce is crossing my baseline plus threshold limit, then the that particular organization will be eligible. So let's suppose I'll give a very layman kind of example. Let's suppose my baseline, and my baseline is determined based on my past 12 months ECR. So my ECR file for the month of August 2024 till July 2025 will be considered for determining my baseline ECR. So if my baseline headcount is coming to let's suppose 60, so my 60 will be my baseline. My threshold will be 5 employees. So 60 plus 5, 65. So let's suppose if my average workforce in the first and the 6 months is coming to let's suppose 66, then I'm fulfilling that eligibility criteria wherein I am my average workforce is coming to around that. This will ensure that for first 6 months, I am eligible. Now, after that eligibility, how the incentives will be worked out is based on that incremental employment every month of 5 employees. That is what my understanding is based on the guidelines which were circulated. Now, come to the seventh month till 12th month. So my average workforce from month one to my current month. So my average workforce for month one means August 2025 till February will be counted, averaged out, and then my eligibility criteria will be worked out. Starting from 13 month onwards, my average workforce for the past 12 months, including my current month. So those kind of eligibility criteria will be worked out. Now, how the calculation mechanism will work, how much transparent it will be. Will there be any separate, a tab within the EPFO portal by which organization can see how the calculation has been done? Is there any error or not? Or they need to raise a grievance with them? So that is something that I think EPFO will be working out. And in terms of how the employer will have to, work out the incentives is, of course, getting the EPFO code number, registering themselves, hiring all those eligible. So that is something that has been clearly laid down in the guidelines as well. So all in all, what are the benefits to the organizations, including the organization having their own private provident fund trust? And that is where the things get interesting, because even the companies having their own private provident fund trust will be covered under this incentives. And up to INR 3,000 is something that will be provided to them. There will be a 2+2 year benefit structure. There will be a seamless direct benefit transfer. I wanted to also touch upon few important aspects around this scheme before jumping onto the FAQ part very quickly.
This is interesting and complicated as well. So I think the pace at which you're going is good.
Now, some riders as to when the incentives will not be paid, or rather, I would say when the organization from day one will not be eligible. These are organizations who are having any pending queries under Section 7A, 7B, 7B of the EPF Act or Para 26 A B of the EPF scheme will not be covered or entitled to these benefits from day one itself. So wherever organizations are having such pending inquiries, the EPF is very much clear. Those benefits will not be provided to such establishments, as well as establishments wherein first information report has been filed by EPFO for fraudulent practices. Any establishment who is undergoing investigation on account of irregularities under the ABRY scheme will also not be eligible to this. Now, what about cases wherein the incentives are provided, but then there's a requirement to cease those incentives? So those cases are wherein the first timer leaves the employment on his own volition. Again, within that particular period, then the incentives will not be provided. In case of any eventuality like death of the beneficiary, which again is the employee, then also it is not there. In the event of a closure, winding up of the establishments, the incentives will not be provided, or rather in the event of any misrepresentation or fraud as well. So the government has got a discretionary power wherein they can basically see whether those issues are coming up, or is there any irregularities from the establishment side. And what I've been told, Jayant, is that the government is not only going to be relying on the ECR data to ensure that the organizations are not engaging themselves in any fraudulent declaration or disclosures. They would also be going through the GSTN data, MCA data, to ensure that the organizations are not carrying out any malicious practices, or rather, I would say, they are not showcasing something, or rather showcasing something that they are actually doing not. So that is something that the government is very clear, and that's why they will also be coming out with the penalty clauses as well. So wherever organizations or even the individual employees are making any false declaration, then also what will be the penalties, what will be the whether there will be interest, damages, or any kind of a prosecution as well. So that is something that the government will work out and share
No, on this
at a
point,
later stage.
I also want to understand, what has been your practical experience of, what common mistakes organizations are doing in implementing these in these the scheme.
So I would say the common mistakes is obviously wherein reporting is not being done in a correct manner, because we do a lot of due diligence for the organizations wherein we examine their labor compliances, labor related filings, and labor related registration. The number one thing that we have seen is that the reporting is not being done in a correct way, maybe because of the lack of knowledge or lack of awareness. Uh, even the gross salary, EPF pages, or rather the returns are also not being filed on a timely basis because of some reason or the other. They might have outsourced it to some service provider who is not competent enough to appreciate that such correct reporting or correct filing will ensure that the organizations get those benefits. At the same time, from the employee side, I would say the HR has to be a little bit more, mm, current with the kind of changes which are happening from the EPFO side, and ensure that whomsoever is getting onboarded, they are fulfilling those KYC related parameters. They are getting their UN generated in a timely way, so that those benefits are being provided to them on a timely basis. So I would say housekeeping is the number one concern that I've seen that many organizations might be facing, uh, which if they don't do it at this stage as well, then at a later stage there could be complication or complexities wherein both the employees as well as the employer organization might not be able to get the benefits from this scheme.
Okay.
And quickly running on the third important aspect is around, exempted establishments. So interestingly, because I was telling you earlier that the exempted establishments don't contribute the PF to the EPFO, rather it is only the pension part which goes. So because the EPFO would not be having any data with them, so what they have suggested is to have asked the trust to basically file a non-contributory ECR for the past 12 months, which is for the period covering July till August, July 2024, or rather, I would say August 2024 till July of 2025. They have to file their non-contributory ECR as well as make sure that their existing as well as new employees are getting their Aadhaar authenticated through this Umang app. So that is something that they've clearly laid down, which will ensure that even the exempted establishments uh, are able to avail benefits under this scheme. So the next slide, I think this is pretty much self-explanatory, so I'm not gonna focus on this slide, but we are assisting organizations as well as their employees in be it from the awareness side or the working out the eligibility matrix. If any DD is required to be done, we are helping the organization. But at the same time, once the incentives are doled out, of course, there are going to be a grievance from the organization as well as employee side. So how to address it, how to, liaison with the regulators as well and ensure that the rightful incentives gets imparted to the respective organization as well as employees. So that is all what we have covered in the scope. Now we can quickly jump on to the FAQ part as well and see. what are the good questions that might have come up from the audience side?
So, quite, most of the questions I have tried to answer, take up in between, Anurag. Uh, but I think this is again a topic which is evolving. So they are. Let's still look at the questions once again.
So I think one person has asked, is it mandatory for the existing employee to FAT stroke Umang app? No, it is not mandatory because for the existing employees, anyways, they are not eligible for, incentives under this scheme. So, but at a later stage, I believe that the government is looking at, ensuring that maximum number of employees get covered uh, to ensure that they have the right sort of data. And anyways, we have seen a lot of KYC related measures being taken by EPFO
If you
to ensure that eligible employees are getting covered under the PF. At the same time, whenever these employees come out for withdrawal and advances, then also we have seen that if the KYC is not done properly, then those cases are refused and they are asked to submit the joint request and then complete their KYC first. Will FAT criteria not be considered for first-time employee who has UN already generated? Yes, even if the UN is already generated, there's a facility in the Umang app wherein you can get your UN authenticated through using that FAT, platform. So that is something that they are very much clear. So that has to be done even for first-time employee who has got a UN generated earlier on. Uh, Somebody has asked, does it this scheme covers interns hired for 7 to 8 months on the payroll of a company? So interns are basically not covered because interns who are not in that traditional employer-employee role, they are basically apprentice and they usually get stipends. Usually the companies don't comply or they cover them under the PF. It is only when they are performing the traditional roles as an employee and getting a salary, then should be covered. In case that is the structure for such interns, then yes, they would be covered under this particular scheme.
somebody even asked the
Uh,
question if some companies have a practice that they don't enroll employees under EPFO or till
hmm.
they are on probation. Will they be eligible during if they have not been enrolled under EPFO?
So then, see, PF scheme is very clear. So if your wage limit is less than or up to, I would say, less than 15,000, then in such a case, there's a mandatory requirement for you to get yourself registered and start contributing towards PF. Anybody who's earning more than 15,000 is not required to get themselves covered unless until they have in their previous organization contributed, in which case again it is mandatory requirement. If it is a first timer who is basically joining the organization contributing for the first time, from the EPFO side it is not mandatory to get yourself covered under this scheme. But having said that, now because of this scheme coming to picture, it makes a lot more sense for these employees to get themselves covered and get enrolled in the scheme and start contributing towards PF. And that is, sort of like you can say another catalyst provided by the government wherein they want to induce the younger population to start building a healthy retiral corpus. Because many young people who are joining at that salary limit might say, okay, let's have a more disposable income in our hands and not contribute towards PF. But I think the government thought process is something they should have that financial literacy, they should have that financial awareness, wherein they should start contributing, start building a good retirement corpus for themselves.
No, one last question in my mind. There are a lot of organizations which takes multiple PF codes, or otherwise they take subcodes.
Hmm.
Now,
Hmm.
how will this calculation work out for them? Will it be, if they're a retail organization having 100 retail stores, or they sometimes organization take state-wise PF subcodes or
Hmm.
unit-wise subcodes. So they'll have to hire 5 additional employees in each subcode, or it'll be in the parent code.
So I'll tell you, there are, and it's again a very interesting question because there are organizations who can be under two categories. One is they would be having different establishment code numbers. So let's suppose I have a company, I have a, branches in different states across India, then what I, as an organization, I would do is either I centrally maintain my PF. Okay. So then there would be one establishment code and then there would not be any added complexity. But let's suppose I have taken a, subcode under Section 2A of the EPF Act, wherein I would be having a subcode, let's suppose in Western India, I have a subcode in the southern part of the India. In which case, for the purpose of this benefit, all these subcodes will be rated and considered as a single code. And for the purpose of this benefits, whatever the organizations are filing through their different ECR will be consolidated and then seen as a one total item. This was case one. The second is, and of course, because the PAN number will remain the same, so the PAN will be considered as a unifying factor. They will, even today, if you go to the EPFO portal and do establishment search, you will get to know that how many establishments are associated with that single PAN. So that will be the deciding factor for the EPFO to determine that what will be the total headcount and how the incentives will be worked out.
Okay. I think
So,
what is a company? What if a company went under restructuring during baseline period, demerger or merger? Will
hmm.
that also be but become part while calculating average baseline number of employees?
For the mergers, and because what happens is when the merger happens, then it will all depend upon what is happening to that particular code. If the code is getting closed pursuant to that merger demerger, then we'll have to see how the because the ECRs will stop getting filed and the government will not be having data. So how will they work out, what is the eligible incentives and how they will be working out those incentives. So that has to be seen what kind of a structuring or the reorganization is happening. In case it is an amalgamation wherein different entities are coming under a single code, then of course the organizations are also required to ensure that the proper reporting and proper, filings is being done from the government with the government EPFO side as well, and letting them know that how the benefits will be rolled out at that point of time.
Okay. I think we are good. And I think we're pretty good on our timing also. We said 15 more minutes and we closed in 16 minutes. Anurag,
Yeah,
any
I'm
closing remark?
not much. I think I have told and explained a lot more. But I'm seeing some interesting questions which are still trickling down. So
Yeah.
I'll be happy to, you can forward it to me and I'll be happy to engage with these persons and help them in their queries as well. Uh, we have already overshot our time. But at the
Yeah.
same time, see, the main crux of this is the benefit which has been given by the government of India. The corpus size is around 1 lakh crore that has been allocated for this particular scheme. And
One,
as far as our discussion, 1 lakh crore, yeah. So
that's massive.
as far as our discussion with regulators are happening, they have been given targets. They have been given targets to ensure that establishments are, availing these benefits, ensuring that the first timers are getting engaged. At the same time, there is a lot of challenges from the EPFO side as well because we don't know what will be the impact of the tariffs, how it will be impacting the employment. Because ultimately, at the end of this entire thing, the government will sit and do the audit and will see what was the benefit, what was the net benefit out of this, what the real employment generation, the skill. The upskillment of the employees has been done or not, and they have formed a steering committee for this as well, which will be overlooking this entire program and what will be the benefits. So, from our side as a consultant, as somebody who's helping the establishment, my take would be it's a kind of a no-brainer, specifically because there's no any special formalities which is involved. The only thing to ensure is that onboarding formalities and your compliance formalities are getting done in a timely fashion, and ensuring that all those necessary disclosures are being done in a proper way, which will ensure that the organizations can get good amount of benefits. Somebody was asking me, is this scheme relevant for only the big companies who are engaging? I would say partially, yes. Any organization which has got a good amount of workforce, attritions happening, fresh employees, rejoinings coming on board, obviously they will benefit. But at the same time, any organization who is at the cusp of, at that juncture wherein they're gonna be increasing, startup or something like that. It will be helpful for those as well, wherein you're trying to scale up your establishment, scale up your headcount. For them also, this scheme will be very much beneficial.
And I think it's more important, it's not just we have to look at from the employee's perspective, we have to also look at from the employee perspective. First time joiners, for them, 15,000 rupees is a substantial amount, which even if
Yeah.
comes into their kitty over a period of 12 months, they do definitely appreciate that.
Hmm.
That may also be true for us, smaller organization.
Yeah. Yeah.
Coming on to concluding remarks, I think you have Anurag's number. Contact us at bythebook.co.in. You can always reach out to him. His numbers, the numbers are also been given here. Uh, this is an evolving subject, and I think could be interesting, not just from an employee perspective. And I see multiple benefits, not from an employee standpoint. And I was having a debate with someone uh, on to what is the right investment. We all think, capital investment, equity investment, real estate and all. But any great investment on an average does not give you more than 12% interest rate,
Hmm.
but with a lot of risk. Whereas the PF gives you a sustainable interest, returns. Uh, s- Sometimes, and they had tax benefits along with this. And this is sure shot. And you can, and now with the kind of benefits government is coming up, you would be able to, withdraw those money at ease more. While there's some debates going on with the unions and the government as to, government is also was to somewhere talking about giving you a kind of a debit card also to the you can withdraw from the PF. But I don't know whether that will happen or not. But there is a lot of ease which government is trying to create when it comes to uh, giving you an option to really to withdraw the money in PF. I think as somebody senior in the in the fraternity in the organization playing an important roles, we have to educate the youth also that they should not consider PF as a liability but as an asset which they are creating, and they should start getting into a habit of parking their money and investing into that asset and build it as a bigger corpus. While I would say financial literacy is also part of this entire scheme, wherein obviously government will try to put the right kind of a strategy, which even I would not have. But guiding them to the right directions, I think that's also important, and creating a right kind of awareness within the organization and with the employees also, that will help achieve the goals which is the scheme is intending to. Uh, Thank you so much. And with this, I think we are done for the day. Anurag, thank you so much. As always, this was a quite interesting session. Maybe once you are in a position to, come up with your calculations, maybe we will and get slightly more clarity on things. We may do a
Definitely.
follow-up session on this. And in the meantime, anybody has questions, please feel free to reach out to us. Thank you so much again for joining us. And thank you, Anurag, once again for this interesting session.
Thanks, everyone. Thanks, Jayant and team. Thanks.
Thank you. Have a good day, everyone.